So, ladies and gentlemen, we're getting international now again. We switch into English again. My guest now on the red couch of DVZ is Vaughn. He's the CEO of AIT Worldwide from the US. It's a pleasure to have you here, Vaughn.
Dankeschön. Thank you for having me.
It's interesting times. A lot of tariff, supply chain disruption talk going on, and all that kind of stuff. How do you look at it as a forwarder from the US?
Well, as a forwarder, we've all been affected by the tariff disruption. But one of the things for our company that we've always thrived in is disruption. So whether it be a pandemic or a recession or whatever that may be, the one great byproduct is that it brings you closer to your clients. So for logistics particularly, the fact that we're brought into the boardroom as partners and consultants to be able to solve problems for our clients, that's what a really good outcome is when these things occur. And for us, we're performing better than we ever have in this disruption. And I think our clients are appreciating that. We've been careful about our approach. We've taken a wait and see at certain areas, but we also gave advice on where to maybe be that could benefit them.
What are the effects on the international forwarding business? Because you just mentioned this wait and see approach. Of course, every customer pretty much plays this, I would guess, right?
Sure. For the community in logistics, I mean, it's a challenge because you're having companies still deciding they're going to move manufacturing out of certain countries. And as I've stated, I don't believe it's completely a move back into the United States. I think it's a move to all kinds of areas. You have the Southeast basin of Asia that's benefiting. I believe Europe's going to benefit from being able to have certain movements as it goes. But it's really by individual client and their choice of what they can do with manufacturing. But it's a very serious disruption, and it will continue for a while.
I mean, AIT has really expanded in the last couple of years. You've done a lot of M&A deals all over the world, pretty much. What are your future growth areas? What is the next steps in your strategy?
Well, we will particularly be able to grow in Europe. So that's a very, very important part. One of our major theses for our business is to grow in Europe. But all around the world, we continue to expand. We've had a model of about 50% mergers and acquisitions for certain growth expansion, and then organic growth. We see some areas that we particularly will grow in Europe that will be France, Poland, maybe the Iberian Peninsula, some other areas, but Germany will be a particular focus for us.
What exactly are you looking at? Is that mainly really air and sea freight forwarding? Are you also looking into contract logistics, maybe even road traffic?
It's a very good question because for us, our investment thesis follows geography first, and then you also have our verticals. So where we want to find density in a certain vertical that we may have, could be automotive, could be like we just bought a company, Marine Spares. We invest in a variety of different areas, but we try to find density in those verticals where an M&A will really make it best in class and give the client a better solution in that particular vertical. And that's really been our expansion thesis. We listen to our clients. We're not moving into a certain country or a certain city just to say we have a dot on the map. We believe that bigger isn't better, better is better. So regardless of size, regardless of where we're expanding, we're going to listen to what the client tells us to do, and that's worked very well for us.
Which are the most interesting verticals here in Central Europe for you, where you eventually try to find more density, as you just said?
Well, we did the true freight forwarding angle where we bought Figo Forwarding years ago. We also bought Panther Logistics into the two-man home delivery in the UK, and we're expanding that service into Germany coming up here soon ourselves. We also bought Luber's Logistics, which brings us into the energy, oil, and gas area that's been very lucrative and really great spot to have a presence in Europe for that mere fact. And then we bought GTS and the Marine Spares. So each one has something that's very unique. But by country, you have different demands, different service offerings, and areas that are more important. I would say in Germany, automotive and industrials are the biggest areas that we want to make sure we're investing in to get that density and really build on what we want to do to service Germany, because Germany, as the third largest economy in the world and third largest exporter, you need to make sure you're in the right areas to be able to build off of that if you're going to grow. And that's how we've looked at it.
It's always interesting if we talk to people from abroad that everybody is really positive on the German automotive industry, and everybody here in Germany is like, okay, well, it's done. Let's forget about it.
Right.
What makes you so positive about the prospects of automotive in Germany?
Well, I think it comes from the relationships with the actual clients, right? So where a broad sector may not know everything that's happening in that particular vertical, we're speaking to the client, and they have plans about how they're going to grow and what they want to be able to build, and we're just listening to them and following that guideline. In the United States, too, we've had the same principle of automotive where, that's trying to be brought back into the United States, but we're also seeing that that's been a struggle. And I think what that's telling us is that the world still has a play, and it's still on the world stage of automotive no better than Germany. So it's going to get right, and I think that area of growth is going to continue. We just have to play and push the right buttons with the client.
You just mentioned the deal way back with Fiege when you bought the forwarding business from them. I think part of that was also that you cooperate in certain areas. Is that still part of the business at the moment?
Yes, it is, and it's an important story that when you're able to have a partner and do business and have a level of trust, and then you're able to make a natural acquisition and merger and acquisition, that's really an important piece because you actually know that player. It's almost like dating before you get married. So we've had really good success with that, and many of our, all of our acquisitions have found a way to be very successful in a multitude of ways. Some we didn't know before, some we did, but it's a lot easier if you have a partnership prior.
What kind of quality aspects are you looking for if you are looking at a company you want to buy? What is important for you? What is the right fit?
I think people love to talk about, okay, you have to have a certain EBITDA number, you have to have a certain revenue. We start with culture. If we have to find that the culture fit is right, that comes from walking the offices, but it also comes from meeting the leadership, understanding philosophies, because if they're too different, and that change is not going to come if you have too much of an area to make up that you can't find commonality. Additionally, listen, we define ourselves as very good acquirers. We listen to who we acquire. We try to give them space. And you don't want to buy a company and then take the heart out of what makes them special. You need to make sure that you give them space and grace to be themselves and find their way in your organization. We've tried to do that, and I think we've been successful.
I mean, you have been very active on the M&A market, and there has been a lot of consolidation. Is it becoming harder to find the right targets?
The surprising thing to me is, M&A as a broad area has been down a bit, but we're getting more and more opportunities inbound on M&A than we've had in maybe the last year or so. So I think it's starting to increase and tick up. When you state whether it's harder or not, I believe it's harder in making sure you're making the right fit. We've done 26 acquisitions since 2016. So we feel we know how to execute on that, but we're not always perfect. And sometimes we miss on some different things that we thought we saw. And it's just important to be able to be honest and admit when maybe we needed to pivot and have a little different approach on what we're doing. Back to your question, I think it is a bit more difficult because it's making us have a little bit more of a protective eye on that solution.
I think you have private equity in your background as well, right?
We do,
yeah.
Yes.
What does it bring you to your expansion strategy? What is really, what is good to have that in the background?
Well, I'll tell you, many years ago, I had to be convinced that private equity would be a good solution because I wasn't quite sure of what private equity would bring to the table. In our case, in the way that we've operated and will operate for the future, private equity is our financial partner. So what they do is give us another set of eyes on being able to evaluate a merger and acquisition target, understand what the numbers are telling us, the culture, the fit, the leadership, the thesis, all of that is left up to us to figure that out. But it gives us confidence when we're able to go out and make an acquisition. We have the financial backing. We have the other set of eyes that have also made other acquisitions. And that just makes things a lot easier for us overall. We've had great success with our private equity partners. We've had two different ones, one in the past, one current, and it's been a famous relationship, one that they let us pretty much do our thing. And it's a truly financial partner, not an operating partner. Two different kinds. We've always had financial partners, and we'll continue to do so.
Do you think that will be become more convenient, or we will see much more of those kind of combinations in the logistics industry? Because of course there's a lot of investment that needs to be done on digitization, all these kind of things.
You said it beautifully. There's tremendous amount of capital on the sidelines right now. They're looking for areas to invest. Our space as a whole, as logistics, has been completely hot for many years and then got a little bit cold here in the last year or so. There's a little worry, of course, with tariffs, et cetera. But I absolutely believe that we'll see more and more private equity getting into our space. And there's deals right now that I know that are about to be had, and there's more coming up through the rest of the year. And I think 26 is going to be a real uptick in mergers and acquisitions from private equity. We're going to see a lot more in 26.
Maybe coming back to the beginning, tariffs, customs brokerage, is that already big part of your business? Is it becoming a bigger part of your business? And do you already have the knowledge in that to really do it?
We do have the knowledge, we do have customs brokerage, and it is becoming a bigger part. More and more clients are asking us to be able to service them with that level of expertise on how to navigate the tariffs, how to navigate different aspects that they're dealing with their products and shipping. And we've been that solution-oriented offering for them for many years, but it's getting more and more. So to your point, I think that's going to be an important emphasis for us as we move forward.
Yeah, it's going to be interesting to see what's going to happen in the industry. It's also going to be interesting to see what's coming from AIT. We're looking forward to it. Thanks so much for being with us today. It's a pleasure.
Well, thank you for having me, Dr. Shane, and good luck to Germany tonight.
Thank you.